Hey, what's up you guys? My name is Nas and welcome back to my channel where we talk about everything related to money, investing, and personal finance. Today I want to talk to you guys about the up-and-coming Robinhood IPO and everything you need to know about it, my opinions on the company and what I think is going to happen during and after the IPO, and how you can potentially get in on this IPO before the offering goes public. So if you want to learn all those, please stick around. So Robinhood, the fictional character that steals from the rich and gives to the needy. Except in this case, we're talking about Robinhood, the trading platform that, well, contrary to what the fictional character does earlier this year, they stole from the needy and gave to the rich billionaire hedge funds. A quick disclaimer before I get started on this video. I'm not telling you to buy this stock during the IPO. All the content in this video is simply my opinion and not financial advice, and you should do your own personal research before you go in investing in any of the companies that I talk about during these videos, or speak to a financial advisor and hopefully they can guide you in your investing journey. With that said, let's get started. Let's answer the first question. Can you buy into stocks prior to IPOs? And if so, how, right? Well, let's first understand what an IPO is. An IPO is an initial public offering where a private company can go ahead and go public with the purposes or the intentions of offering shares of their company for public ownership in order to raise capital from the public markets. So generally, the average investor would actually have to wait until the day the stock goes public in order to be able to buy in any shares on that company. And generally, stock IPOs can be good or bad, but the general idea is that they're meant to be good for the companies as it's providing them access to liquidity from the public markets. So ideally, you'd want the share prices of a publicly traded company to keep going up, especially after an IPO, because that provides some returns for its shareholders or investors and helps the company raise a lot of capital by being more in demand in the open market. Now, these can go really either ways. In recent years, it seems that a lot of IPO stocks get extremely overhyped just due to the sheer fact of market sentiment that is exaggerated through the medium of social media. And that can really have some negative or positive impact depending on each individual company's unique attributes. You see, a major problem with some of these overhyped stocks is the fact that their prices can go up dramatically in the first couple of days just due to emotional market sentiment. And the issue here is that those prices don't generally hold over the long term. And shortly thereafter, the price can take a nosedive downwards dramatic, wiping out the accounts of beginner, experienced investors along the way. That is not to say that there aren't fundamentally great companies that IPO and that actually do very well over the long run. In a lot of these cases, you should take these IPOs and the hype with a grain of salt. Now, the very fact that Robinhood is supposed to be going public in the short-term future, potentially between Q3 and Q4 of 2021, that IPO is actually going to give Robinhood users the access to buy Robinhood stock within the Robinhood trading platform. That sounds a lot like the concept of Inception. Anyway, I'd imagine the price to go dramatically up in a very short period of time right after the IPO. You see, this can get very scary very fast because if everyone piles on to buy onto this stock right after the IPO, it's going to set the price to go up dramatically. And as it goes up dramatically over a short span of time, the higher the potential of it collapsing dramatically as well and wiping out so many people's investment accounts. Not to mention, there are always going to be those short sellers who are going to be shorting the stock along the way down, as the concept of shorting allows you to be making money on the way down from the point at which you short the stock all the way down. That spread is where you get to make the money. But I'll get into the concept of shorting in a later video. While it's very difficult to predict the future of what's going to happen to Robinhood's shares after the IPO, what would you do if I told you that you could invest in the stocks of Robinhood prior to the IPO if you could buy into the company pre-IPO? Let's talk about how you can exactly do that. But first, if you've stuck around this long, please do me a favor and smash that like button for the YouTube algorithm. It would seriously help me out. Now, let's get started. So under normal circumstances, if you wanted to get in on the stocks of a company pre-IPO, you would have to have friends in really high places in the company, be an advisor in the board, or even have to be an angel investor in order for you to get any allocations to shares pre-IPO. But I'm going to tell you that there are a few providers out there that allow you access to some of these companies that are not public yet, and one of my personal favorite ones is called EquityZen. They're able to actually get you allocation for shares of a company even before they ever go public. Now, why would you ever want to buy into a company pre-IPO, right? Well, the main reason being there is a potential to make a major return on your investment if you're able to get ahead of the herd and get in on these companies pre-IPO. But along with those exponential returns that you can potentially make, there are a very large chances of losing all your investment as well, because with high reward comes high risk. You see, one of those instances could be that the company may never actually be able to go public. What if they go broke before they go public and they go bankrupt? You will end up losing your entire investment. So please do keep that in consideration. Now, that isn't something that's going to happen overnight. A company just can't go bankrupt overnight, but this is a very real concern because in pre-IPO markets, there is very little liquidity available, so you can't simply just get in and out with your money out of the markets just like that, unlike that of companies that are already being offered in the public markets where you have vast amounts of liquidity. So in order to get access to these pre-IPO stocks, should you decide to go down that route, you'd simply go to the website of equityzen.com and sign up for an account there and provide all the documents as necessary to prove that you're an accredited investor. Once registered, you can get access to the whole list of companies available pre-IPO in order to buy into their stock, and you can make your selections there as per your investment appetite, and EquityZen will help facilitate the deal. You see, by doing this, you're immediately ahead of the herd by owning shares in the company that has yet to go public. And once they do go public, based on the lockup period for your shares, you may be able to realize 2 to 3 times returns on your investments soon after the IPO. Or you can choose to hold on to the shares and ride the wave of the valuation of the company for years to come. The fact that you buy in before the rest of the herd will get you rewards in the long run. Well, you may be saying, that sounds great and all, Nas, but what's the catch here? Well, as I mentioned before, you need to be an accredited investor in order to sign up with companies such as EquityZen in order to get access to these pre-IPO companies, right? Well, an accredited investor is actually an official term. Just because we're people who trade stock in and out of the market on a day-to-day basis does not grant us the title of an accredited investor. Actually, to be considered an accredited investor, there are 2 ways about it. You can do either or. So the first one being, you need to prove that you've had an income of at least $200,000 per year over the last 2 years. Now, this may be an instant knee-jerk reaction thinking like, oh man, this means that this video is meant for individuals of higher net worth. There's a second way to do this as well, and that second way is essentially proving that you have a net worth of at least $1 million. Now, this can be proven through whatever liquid cash you have, other assets that you may hold to prove what your net worth is. So if you meet either one of those criteria, you can be approved as an accredited investor and get access to these companies pre-IPO. There is actually a third way of doing this, which is quite uncommon, and that is essentially being a part of a company that's at least worth $5 million in assets. And if you serve as an advisor on the board of that company, you may be able to get access as an accredited investor to pre-IPO companies. But actually, the first 2 options I mentioned are the most common ways that people go about being titled as an accredited investor. Now, it doesn't necessarily always mean that you as an individual would have to prove either you're worth $1 million or made at least $200,000 a year. See, the way I'm going about this is I'm trying to gather a bunch of my peers and pool our resources together to prove that we have a fund with a net worth of greater than $1 million. And then that fund of ours can be approved as an accredited investor. And then I can get access to these pre-IPO companies through service providers such as EquityZen. Now, while you can get into these companies pre-IPO by getting approved of being an accredited investor and buying in prior to the companies going public, for certain stocks that are very, very hyped, much like Coinbase was and how in the future Robinhood is going to be, it can be very hard to buy in on the allocations that are available for these stocks because the demand is so high that you may end up paying a premium just to get a piece of the pie. But I cannot stress how risky it is sometimes buying into some of these IPOs, as the companies can quickly take a nosedive in the short term right after they IPO. So personally, I wouldn't give myself too much exposure to pre-IPO stocks for my portfolio. Honestly, I hope I'm able to teach you something new, and I hope I've given you something to strive towards, because when you're able to get access to some of these companies early on is when you can actually make some major returns. Whereas most people try to keep trading these stocks once they go public, a lot of them don't understand that you can get in on these companies before they even launch to the public. So let's talk about the current events going on with Robinhood and what's working for them, right? So it seems that Robinhood has been able to pull together $7.6 million in profit off of $959 million in revenue in the year 2020. This was actually the first time that they revealed their financial statements in the S1 SEC filing ahead of their IPO. So Robinhood actually reveals that they have $11.6 billion in cryptocurrency holdings before this landmark IPO of theirs. And this has really been exaggerated due to the pandemic boom in meme stocks and cryptocurrencies. So Robinhood intends to raise $100 million in capital from this initial public offering, and they're going to be listed in the NASDAQ with the ticker HOOD, HOOD. Now here's a breakdown of the Q1 earnings for Robinhood for the year 2021. And it seems 38% of their entire profit comes from options, which is pretty high, even though they've reduced it down from 47% in 2020. But that's not really favorable. You don't want a majority of your income coming just from options. They have 25% coming in from equities and 17% coming in from cryptocurrencies. Cryptocurrencies by far saw the largest growth in revenue, because cryptocurrencies in 2020 was only 3% of their profit. Speaking about the cryptocurrency growth and Robinhood has also been one of the first trading platforms that has allowed investors essentially to buy in on cryptocurrencies using a conventional trading platform, right? Where you trade stocks, equities, options, and the likes. So it was one of the first ones that actually allowed the purchase of certain popular cryptocurrencies such as Bitcoin, Ethereum, and now even Dogecoins on Robinhood. But you see, if you buy cryptocurrencies on Robinhood, you don't get to hold your cryptocurrencies on you. And I don't mean holding it tangibly like physically, but holding your cryptocurrencies in your own personal cold storage or personal crypto wallets. Robinhood actually is the custodian of all these cryptocurrencies, and you're not able to trade these cryptocurrencies between friends or make payments with it. You are only able to hold on to it and then sell it off in Robinhood in order to realize potentially profits and gains from whatever the price volatility of the cryptocurrencies, and exchange it back into fiat currency, again via Robinhood. You're not able to move it into any other platform. So there are some great new things coming for Robinhood in the near future. They have recently hired a new COO for their crypto division by the name of Christine Brown, who's just been with the company for a little over a month now. And she's said that she plans on adding the feature of being able to move cryptocurrencies out of Robinhood and for their holders to be able to hold it in their personal wallets, therefore giving them the ability to exchange their cryptocurrencies between friends and for purchases however they deem fit. Now, if this change were to come to fruition, this would be a great step forward for Robinhood, and I think this would really generate a lot of demand for cryptocurrency investors to come into Robinhood. Now let's talk about some of the upsides and downsides for the company, right? And I'll get started with the downsides. So number one, Robinhood essentially got a large portion of the market share of users by offering zero fee trading, and it was one of the first of its kind. But in recent times, there have been other competitors such as Webull and others that have been coming up that are offering the same zero fee trading platform. So they have been losing their competitive advantage over the last couple of years. Number two is reliability. Robinhood has had its fair share of reliability concerns with servers going down, potential glitches, and other loopholes and exploits that have happened in the system. Much like the time where the servers ironically just went down when GameStop was at its peak and investors couldn't get out of their positions. So number three is bad press. While there is a saying that there's no such thing as bad publicity, but in the case of Robinhood, I would say otherwise. You see, the company seems to be getting sued left and right due to glitches and loopholes in their system. Common one being that they had a problem in the system where people were able to exploit over leveraging in their positions. And there was this one case where a kid ended up over leveraging his position on a certain options trade, I believe, where he lost upwards of $700,000 and unfortunately ended up committing suicide as a result. So the SEC has really been cracking down on Robinhood, and they've been slapped with millions and millions of dollars worth of fines and getting sued nonstop. I believe this is going to be a real big deprecating factor in the future for them. Enough with the downsides, let's talk about some of the upsides for Robinhood. And the first major upside for the company is its platform, its trading platform and user interface. It is simply beautiful. It is perfect for beginners. It is not intimidating at all, and it's extremely easy to use for the average and for the beginner investors, which is why they've been able to attract so much of the market share, right? So building on to the user interface bit, their user interface is actually the least complicated and least intimidating, unlike from other competitors such as Webull. So the second point is the fact that their mobile app is so versatile and so easy to use, which keeps on attracting more and more people to come over into this platform. Although they have so much bad press going around, it is just simply beautiful and easy to use. And I still personally use Robinhood for making a lot of my trades over the phone, just because I can do it real quick, real fast. The third most uplifting factor for Robinhood is the fact that they have the majority of the demographic of the millennials and Zoomers, or Gen Z. And the reason for that being, it's so easy to use for the beginner, and you can simply just download it on your phone, such as an app like TikTok or Instagram. It's just as easy to use. And with the free stimulus checks that have been coming in over the last year, we've been getting a lot of newbie investors coming into the market and just going all in on certain stocks and seeing exponential gains. And they've been referring their friends to come in. As such is the marketing play for Robinhood, where if you sign up using a referral link from a friend, your friend and yourself, the referrer, get a free stock from the platform. And as such, there has been so many people flocking into the Robinhood platform, given the fact that it's so easy, their marketing is amazing, and the fact that people have essentially gotten a free money glitch from the US government right now. So it only makes sense that they have the lion's share of the newer or younger investor population right now. Now, my personal opinion is that there's a lot of upsides for Robinhood, and it's very hard to decide on which direction the stock is going to go after the IPO. They do have a lot of upside, but they also have a lot of hate in the market just because of everything they have gone through. Now, there's going to be a lot of potential for the price to go parabolic and just go to the moon right after the IPO and see some corrections along the way. And hopefully it's not going to come down or get shorted the heck out of, hopefully. And we'll see some nice gains along the way if they play their cards right. So I think the biggest upside Robinhood has is the fact that they have an ever-growing base of millennials and Gen Zers coming into their trading platform as beginners or even seasoned investors. And unfortunately, this has facilitated a sort of an online gambling scenario given the current pulse of the market coming out of the global pandemic that we had. And this may actually end up wrecking a lot of beginner YOLO investors. But at the end of the day, this is great for their business model, because whether we make money or we lose money, they make money anyway on the trades that we execute. Robinhood also has a very powerful tool up their sleeves, an ace in the hole, you may say, and that is none other than the infamous Reddit group Wall Street Bets. You see, there are two reasons why Robinhood loves Wall Street Bets for this IPO of theirs. Number one is Wall Street Bets has such an influence over the masses of users in their forums that they're essentially able to convince people to YOLO all their investments into IPO stock, promising Photoshop to gains of like 200-300% returns. And the second reason being, who do you think is going to actually benefit from Wall Street Bets pumping these stocks? It's going to be the big fish. I mean, the real big players of Wall Street Bets are going to be pumping these stock and spamming social media and all their forums and platforms about the stock and the potential of where it can go during IPO. And as such, it's going to drive a lot of volume into the stock during IPO and drive the prices way higher than expectations. And then they may end up selling all their positions near the peak, thus driving the price down to the floor and wiping out so many investor accounts along the way. Now, don't sue me, bro. I'm just saying that this is a potential scenario and it could happen. I hope it doesn't. So if nothing else, all the bad press or good press so far has provided great marketing initiatives for Robinhood. At the very least, Robinhood is going to become a household name for everyone. And I predict this IPO to have great volatility upon initial offering, and it could go crazy high based on the number of supporters it has, and it may fall to the floor just because there's an equal number of haters of Robinhood in the market just based off of their track record. So either ways, I just hope that you all are able to make money on this. And I don't know, do you think we may be seeing another GameStop or AMC like situation happening with Robinhood? Let me know what you guys think in the comments down below. With that said, you guys, I hope you enjoyed this video. Please don't forget to smash that like button if you enjoyed this content, and subscribe to my channel if you haven't done so already. I post videos every Tuesdays and Thursdays at 12 noon Eastern time. So please do subscribe, as it would really help me grow this channel. And I've left links in the description down below to my socials where I post daily when I'm not posting here on YouTube. I hope to see you guys in the next one. Take care. Bye.